The 8-year legal saga is finally over for two top executives of ExSilver Bird Group after the Court of Appeal acquitted its former MD Datuk Jackson Tan Han Kook and ex-CEO Derec Ching Siew Cheong of all 134 charges of cheating and purportedly using forged documents to cheat Maybank of close to 67.4 million ringgit. The three-member Court of Appeal bench said they found no merit in the prosecution's appeal and ruled that the two men remain free. This is the final appeal by the prosecution, as the case originated from the Sessions Court and parties are only allowed a two-tier appeal process. Tan and Ching were jointly charged in 2012 for cheating Maybank by using false documents in applying for bankers' acceptance facilities for three companies: Asian Food Link, Violet Bonanza and Stanson Marketing. However, the KL Sessions Court acquitted them as the defence had raised reasonable doubt in 2016. The High Court dismissed the prosecution's appeal and the decision was upheld today. In 2012, ExSilver Bird, which by then was renamed High Five Consolidated, dropped a bombshell when it announced the discovery of a 112 million ringgit hole in its finances, which later turned out to be 297 million ringgit. The firm eventually fell into PN17 status, and its securities were delisted from Bursa Malaysia in 2014. Tenaga Nasional, or TNB, saw its first quarter FY20 net profit halve, thanks to a massive 402.8 million ringgit foreign exchange loss against the US dollar and the Japanese yen. Net profit declined by 54% to 717.9 million ringgit, as quarterly revenue fell by 12% to 11.65 billion ringgit. TNB says top line was down because of a 307.5 million ringgit rebate from the imbalance cost pass-through against the surcharge of 1.37 billion ringgit posted in the first quarter of FY19. Given the ongoing COVID-19 pandemic and the uncertainties in the global economic environment, TNB says it foresees prolonged challenges to the group's prospects this year. However, TNB President and Chief Executive Officer Amir Hamzah Azizan believes the utilities giant will be able to remain resilient due to a robust balance sheet. The group expects economic activity to gradually pick up in the second half of 2020 and to register a positive recovery next year. Fugitive Malaysian financier Jho Low is said to have been able to fend off US and Malaysian investigators who accuse him of masterminding the plunder of 1MDB with the aid of a businessman with links to Kuwaiti royals. The Wall Street Journal, or WSJ, says Low had turned to Kuwait's royal family for help in early 2016 as US authorities began closing in on him. Quoting French-Syrian businessman Bashar Kiwan, WSJ reports Low had sought out a son of the then Prime Minister, Sheikh Sabah Al-Jaber Al-Mubarak Al-Hamad Al-Sabah, whom he had met years earlier, and offered to use his contacts in China to steer investments to Kuwait. Kiwan, then a business partner of the Sheikh, reportedly told WSJ that Low had said during a dinner event, quote, "I earned billions in Malaysia. I will earn 100 billion in China, minimum," unquote. WSJ adds that the Kuwaiti ties brought Low new protectors, new business deals, and new channels for moving money. It was these newfound ties that reportedly enabled Low to flee to Kuwait last September despite Interpol's red notices. Kiwan, who is in France, was convicted in absentia in Kuwait of forgery and document falsification, charges he denies. He reportedly told WSJ that it was retribution by Sheikh Sabah after the businessman balked at a request from Low to use his publishing and media firm Al-Wasit to shift money between different company accounts. WSJ says Low ultimately used Al-Wasit to move 1.4 billion yuan or $200 million. Low's representatives have reportedly declined to comment, while a spokesperson for Sheikh Sabah said he categorically denies any wrongdoing. Cocoland Holdings co-founder Liu Fokming is set to surface as a substantial shareholder of Muar Banli Group or MBL with a 7% stake, sources familiar with the matter told theedgemarkets.com. A source says Liu bought the MBL shares at around RM1.35 per share as he saw the potential of the latter to do something big. MBL, founded in 1987, is a palm kernel oil expeller as well as a manufacturer that specializes in palm oil and oilseed crushing machinery. MBL is also a minority shareholder of Cycle and Carriage Bintang, the country's largest dealer of Mercedes-Benz cars. Another source points out that Liu had plenty of cash in hand after divesting shares in furniture maker Euro Holdings. Penang-based tourism and property development outfit Iconic Worldwide is venturing into face mask manufacturing, initially targeting factory and construction companies in Malaysia. The new business venture will be placed under its fully owned subsidiary Iconic Medicare. The group says its manufacturing facility in Juru Penang is capable of producing face masks at a rate of 100 pieces per minute, amounting to 2 to 3 million face masks a month. It says orders have already been fully taken up until July, and it plans to up production to 5 million face masks a month by the third quarter of 2020. Iconic Worldwide Managing Director Datuk Tan Kiat Tet expects demand for face masks to continue to rise. He points out that most of the masks in the domestic market comes from China, and producing face masks locally would guarantee reliable supply and provide quality assurance. The face mask business will start contributing to the company's bottom line in the fiscal year ending March 31st, 2021. It is also expected to help cushion the impact on the group's property and hospitality business, which has been affected by the COVID-19 outbreak.